Question number one. Question number one. A business employ bookkeepers and accountant. So first, bookkeepers, what they do, they will prepare the document, and then they will record the document inside the book of prime entry. And from book of prime entry, they will prepare the ledger. From the ledger, they will do a trial balance. Then they stop there. And then the accountants, what the accountant will do, the accountant will take this trial balance, they will take this trial balance, and then they do adjustments. Adjustments is like, I cannot tell accountant or bookkeeper. Both people will do the adjustments. Both people will do the adjustments. So it's like share work lah. Okay, after that, after they make adjustments between these two people, then they will prepare the financial statement. After they prepare the financial statement, they will calculate the ratio. That one we call analyze. They will analyze the financial statement. After they analyze the financial statement, then they will take a decision making. And also they do a recommendation and everything lah. Okay, all this will done by the accountant. Okay, which task could an accountant perform? Which task could an accountant perform? Extract the balance from the ledger to produce a trial balance. This one prepared by the produce a trial balance is bookkeeper. Making entries in general journals, adjusting for provision for doubtful debt. Okay, making entries in a general journal is bookkeeper. Okay, yeah, as I told you, provision for doubtful debt is actually adjustments. Adjustments can be both people, but who will record inside the general journal? Bookkeepers, because general journal is here, book of prime entry. Okay, then next one is preparing monthly report and analyze profitability. Analyze. Accountant perform analyze. Okay, it's accountant. But wait, last one. Recording sales and recording is bookkeeper. Recording in a book of prime entry is bookkeeper. So the answer is C. Answer is C. Okay, next one. Question number 2. What is asset? Assets, amount owed to a business. Amount owed by a business. Amount owed by a business is liability. Amount owed by the business is liability. Item owned by the company, yes, is confirmed asset. Is confirmed asset. And how about, okay, based on this, which is not answer. B is wrong. B is confirmed wrong, because they say yes, it's not asset, it's liability. And D also wrong, because they say yes. Okay, now it's the answer is either A or C. And then I see this one's correct, this one's correct, this one's correct, this one's correct. So now amount owed to a business is asset or liability. Amount owed to a business means someone owe the business. If someone owe the business, is it asset? Yes. If someone owed, the amount owed to a business means someone owe the business. If someone owe the business, is asset. So answer is C also. Answer is C also. Can I? Okay, any problem, stop me and ask me. Question number 3. On the 5th, on 15 February, Kalau made a following entries in his account. There is a debit bank. Debit bank means I receive money. Debit bank means receive money, and then you allow a discount, and also you receive money from Drogba. That's why you credit Drogba. Okay, you receive money from the Drogba. Which transaction are being recorded? Which transaction being recorded? I see the A, Drogba paid Kalau. Drogba paid Kalau by check after taking a cash discount. Actually, yes. Answer is A. Okay, because it's a debit side. Kalau received money. From who? From Drogba. So answer correct lah. Answer is A. Number 3 is A. Then number 4. Number 4, J is a manufacturer. On the 1st February, he purchased a machine 15,000 from Vinita. He paid 10,000 immediately with a check. And from his personal bank account. Okay, any money come from the personal life. Any money that come from a personal life, we call that capital. We call that capital. The balance was to be paid in June. June means you owe the guy lah. You owe who? You owe Vinita. You owe Vinita. So now the conclusion is your machinery increase. Your machine increased by 15,000. And then your capital also will be increased because your owner pay for you. Right? The capital will be increased by 10,000. So the balance 5,000 is we owe the Vinita. So the amount that you owe to the Vinita also will be increased. The amount that you owe to the Vinita also will be increased. Machinery is asset. Asset increase will be debit side. So answer A is wrong. Answer B also wrong because they write 10,000. The machinery value is 15,000. So this one's correct. This one's correct. And credit will be capital. Credit will be capital. This one is wrong because they say bank. Bank is wrong actually. Okay. If the question say from the business bank account, if the question say from bank account or business bank account, then answer is C. But now they clearly tell us it's a personal bank account. If it is a personal, it's actually capital. Capital increase and Vinita also will increase. Correct or not? Understand now? Question number 5. Jamil financial year ends on 31st December. On the 1st January 2021, he brought down debit balance. Wait, the moment I see the debit balance is my asset. I know it's asset on his stationery account. So in a stationery account, they have a debit balance. Okay, what does this mean? This is a stationery that you haven't used, that you already buy, but you haven't used. Amount owing for stationery, no. If your amount owing means liability, liability is supposed to be credit side. So confirm wrong. Amount paid for stationery. If you paid for stationery, the detail will be bank. The detail will be bank, not brought down, not BD. Okay, it's supposed to be bank if you pay means. So no. Cost of the inventory used. The cost of inventory used in a stationery account, we will write what? We write income statement. It will transfer to the income statement. The cost of stationery that we used will be transferred to the income statement. So wrong also. Inventory of the stationery on the 1st January 2020. Yes, the inventory that you haven't used. Okay. You understand or not? I just simply show you the stationery account. The stationery account will be like this. Stationery account, balance BD, maybe 20. And then I buy a new one, 100. Bank. And then I go after that, I get an end of the year, I go check. The left stationery is only 80. The left stationery is only 80. So my balance CD will be 80. So you balance up, you'll get how much stationery that you used. 120 minus 80, you get 40. That 40 is the stationery that you used during this year. The stationery that you used during this year, that one will be your income statement. Stationery is expenses, but the stationery that you haven't used, this 40, the stationery that you used is expenses. Wait, I write here. The stationery that you used is your expenses. The stationery that you haven't used, is your current asset. We put it as a current asset because it's a future enjoyment, give you a future enjoyment. The stationery that you used is your expenses. The stationery that you still haven't used is like something like prepaid, like you already pay for the stationery, but you haven't used it. You already pay for the stationery and then you buy already, but you still haven't used it. Something like prepaid. That's why I put under current asset. Okay, next one. Daksha returned goods to Amina. Daksha returned to the Amina. So I assume I'm the Daksha. Which entry Daksha will make a book? So if I return to Amina means it's a sales return or purchases return. If I return means it's a purchases return because the thing that I purchase will be written by me. So it's a purchases return. Purchases return. Purchases return is my asset or liability. Sorry. Let me write here. I don't have place. Okay, right here. Purchases return. Purchases return is expenses minus. Purchases return is expenses minus. If expenses minus will be debit side or credit side. Purchases return is expenses minus. It's reduce the expenses, so it will be in a credit side. So purchases return will be credit side. So I look at the answer A, B, C, D. The C is wrong. D also wrong because they put in a debit side. Purchases return supposed to be in a credit side. So this one is correct. This one is also correct. Okay, and then I debit the Amina account. So correct lah, because I returned to Amina, right? Both are correct. So now the problem is ledger. Which ledger? Amina is my trade payable. Trade payable will be in a general ledger or purchases ledger. All the trade payable will be recorded in the purchases ledger. Okay, all the trade payable will be recorded in a purchases ledger. So the answer is B. And the purchases return, of course, in a general ledger. So I give you some a quick revision on the division of the ledger. We have three type of ledger. One is the nominal ledger, or sometimes we call that general ledger. Another one is purchases ledger. Another one is sales ledger. So remember this, all your trade payable will be recorded in the purchases ledger. All the trade receivable will be recorded in the sales ledger. Other than trade payable and trade receivable will be recorded in the nominal ledger. I give you some example. Okay, the sales account will be in a nominal ledger. Purchases account will be in a nominal ledger. Okay, any non-current asset, motor vehicle will be in a nominal ledger. Okay, everything except the trade payable and trade receivable. You don't get confused with the sales. Sales ledger is different. Sales account is different. Sales ledger means the book. A ledger means the book that we contains all the trade receivable. Sales account means we record the cash sales, credit sales, all the sales. That one will be in a general ledger or nominal ledger. Okay. Next one, question number 7. Which book of prime entry is written up from the copy of the credit notes issued by the trader? Wait, let me see. When I see the credit note, I know this is the return. When I see the credit note, I know this is the return. And issued, who will issue a document? Buyer or seller? Of course, trader, but buyer or seller? Seller. Issued by the seller. So this is the sales return. How I know sales return? Because they say issued. Document issued means seller. I'm the seller. Credit note mean is written. So this is the sales return. This is a sales return journal. Understand not? Okay. Very quick one for documents. We have 5 documents actually. First one is invoice. Invoice, who will issue? The seller will issue to the buyer. Why? It's a credit sales or credit purchases. It depends on who are you. Okay, it can be credit purchases or credit sales. We use invoice. Seller will send to the buyer. Next one is credit note. Credit note, seller will send to the buyer for what? Approve the return or approve reduce invoice amount. Maybe some mistake in the invoice, right? They will if they approve to reduce the invoice amount, then they will send you credit note. Next one is debit note. Debit note sent by buyer to seller. Debit note sent by buyer to seller for what? To request reduce amount in invoice. Okay, they want to request on it. After the debit note, we have a statement of account. Statement of account, seller will send to the buyer, sellers to send to buyer to summarize. It's a summary of the transaction for the month, every month. Okay, the last one will be check. Check is sent by the seller, buyer to seller. Buyer to seller. Check will be sent from the buyer to the seller. It's like a instruction to the bank to pay the money lah. Instruction to the bank to the pay money to pay lah. Okay, these are the 5 famous documents in IGCSE. And out of these 5, debit note and statement of account, we don't record anywhere in accounts. Debit note and statement of account, we don't record anywhere. Okay, invoice, we will record in it's either sales journal or purchases journal. Depends on you issue or what. Okay, credit note is sales return journal or purchases return journal. Check, of course, cash book. Debit note and statement of account, we don't record anywhere in accounts. Anywhere in accounts. Okay, question number 7 done. Question number 8. Which transaction is recorded in a general journal? General journal. Okay. First, I read the D. Purchases of the goods on credit. Purchases goods on credit will go to the purchases journal. Purchases of a motor vehicle by check. By check means it's go to the cash book. Drawing cash. Cash mean will go to the cash book. Correction of error. Yes, we use the general journal or journal to do the corrections. Question number 9. Raminder maintains a petty cash book using imprest system. You know what's imprest system? Top-up system. Okay, whenever the amount reduced, they will top up to make sure you have a fixed amount, which is for this question 250. The monthly imprest of 250 is restored on the first day of each month. In January, petty cashers spent 105 and received 15 from the stationery supplier. So how much money that they have now? How much money that they have now? From the 250, they spend 105 and then they receive back 15. So how much money that they have? 250 minus 105 plus 15. So now they have 160. This is the balance money they have. This is the balance money they have. But what the question asks? The question asks how much was given to the petty cashier on the 1st February to restore the imprest amount. What is restore? You're supposed to have 250, but now you have only under 60. You're supposed to have 250, but now you have only under 60. So I need to top up how much? 250 minus 60, I need to top up another 90. So the answer is A. Don't you get under 60 straight away do D. D is wrong. Okay, D is the balance. This is the balance in the hand. But the question asking restore. How much restore? You will restore another 90. So the guy will have 250 to start the next month. Okay. Okay, question number 10. Question number 10 is the total of the trial balance failed to agree. The total credit column is 10,000. Credit column is 10,000 and 2 errors were later found. What is the total debit column in the trial balance? So the thing is, your credit side is 10,000. Debit side, they don't know. Okay, but there's a 2 mistake here. There's a 2 mistake here. So the sales journal had been overcast. The sales journal has been overcast. If a sales journal overcast means debit side or credit side, which side is over? Debit side or credit side, which side is over? Your credit is over. Okay, if your credit is over means your debit will be here over, here over, here will be less. Less by 100. Less by 100. Okay, next one. Goods sold to Sarah on credit 200 had been incorrectly debited to Sarah. Wait. Goods sold to Sarah on credit. Wait. Whenever you sell goods to Sarah, you credit the sales account and then debit the Sarah because your trade receivable Sarah increased. On credit, 200 had been incorrectly debited to Zara. So what is the mistake is I'm doing a red color pen. Your sales, you put 200 ready. Your sales 200 ready. But in a debit side, you're supposed to record in Sarah. You didn't record anything in Sarah. but you mistakenly record in Zara 200. So do you think this particular mistake will affect any trial balance? This is sales, this is sales. Sales to 200 there. And Sarah, you're supposed to write in Sarah, but you didn't write anything in Sarah, but you record in a Zara. So your debit credit is correct. Only in a debit wrong account, but total debit, total credit will be balanced. So the only problem now is the 100, which is in a debit side will be less by 100. If the debit side, because credit side over by 100 means credit side over by 100 means debit side will be less by 100. So my answer will be 10,000 minus 100. 10,000 minus 100, I get answer is B. That's enough correction of error. Okay, for this one we stop here. Next one 11 until 20.